I remember the first time I read Rich Dad Poor Dad, I literally threw it away. I'm like, this is the stupidest book ever. Why? Because he says savers are losers.
Hey guys, it's George Uno with REIClub, and we're back with another edition of First and Worst. And today my guest is Ryan Lee, who is a third member of Cashflow Tactics. So you've probably seen Jimmy, you've seen Brad, but I saved Ryan because he's the best for last. I'm just kidding, guys. But he is amazing. He's got an awesome story. So a lot of us, he started out going to school, getting the job, following the American dream. But he lost a lot of net worth in 2008, and he was making a really good salary as a medical device salesman. So when he got wiped out in 2008, it really forced him to reevaluate his entire world and his entire plan and what he was doing. So he really looked around and said, I can't be following everybody else. Everybody else is in the same trap. What do I do that's different? So he started looking at really wealthy individuals. What do they do? Well, they leverage life insurance policies, and they have these like loopholes that they use to really amplify their wealth and create velocity on their money, which we're going to talk about a little bit later. But long story short, he read Robert Allen's book, Creating Wealth, and got into real estate. He did some deals. He eventually got into a deal that was a nightmare for him, and it's a really good story. We're going to learn a lot from that one. But Ryan is a guy who was on the regular path that we're all on, who looked at real estate, he really evaluated it, and then he made that jump. It took that jump and just got into it. And he did it the right way, leveraging life insurance, not just, getting bank loans on rental properties, doing it in a really smart way that allowed him to eventually walk away from his corporate job and be financially free, which he is out in the world trying to share and trying to help all of us achieve. So, Ryan, I'm going to hit you with a lot of questions at the end because I'm definitely on that path, and so is my audience, and we're going to hit you with a bunch of questions. But for now, man, how are you doing?
Heck yeah, George. I'm so excited to be here with you and your audience, dude. I love what you're sharing with people because I think really at the end of the day, it is the American dream. The American dream is to live our best life. It's to use our God-given gifts, skills, talents, and abilities and to live a purpose-driven life. But I think so oftentimes what holds me, you, and so many people back is money. And it's a misunderstanding of what it is, what it represents, and more importantly, how to use it to buy our time and attention back. And so, man, I'm great to come here to share this message with your audience. It's such a privilege and an honor, George. I appreciate it.
Yeah, man. Thanks so much for being here. We can't wait to hear what you got to say. So take us back, man. Take us back to when you were, getting out of school, got your job. What was it like when you were just a regular guy, working 9 to 5, or probably more than that?
Yeah, you know what, man? I'm gonna go back one step further. I kind of messed around as a teenager, right? And I ended up dropping out of high school, messed around with my life, and when I finally got things back on track, I was 23, and I felt like I was so behind in my life. And so I got a GED, and I went to college at 23, not for the intent of going to college. Like, I went to college to check a box. I just knew that's what you do when you're a responsible human being, so I better go to college, right? And so I ended up getting my 4-year degree in 2, not because I'm smart, but because I just ran through it as fast as I could. And I got my first job, and I'll never forget that, man. It should have been rewarding. It should have been validating. It should have been a pat on the back. But my very first paycheck, so dating me back, I got a paycheck in an envelope, right? And I remember waiting to the end of the day to open that paycheck, and I opened it, right? And I took that paycheck out because I was excited for my hundreds of thousands of dollars, right? But I remember when I looked at that paycheck and I looked at all the deductions, the taxes, the insurance, all the things that were coming out on top, I was left after a college degree and moving my new wife and me to a different state. I was left with less money after 2 weeks than I was making as a side hustler paying my way through college. And I thought to myself, like, the very first crack in my plan started to form. This little voice started to chirp saying, you should just quit now. But at that time, George, I had a baby on the way. My wife was pregnant, and there was some complications that we knew about early on in her pregnancy. So anyway, as a responsible human being, I thought, man, I'm just going to climb the corporate ladder faster. I'm going to work harder. And I'm going to get what I want quicker. And that kind of set me off on a path. For the next 4 years, man, I climbed the corporate ladder as fast and as hard as I could. And it was kind of fun, honestly, in the beginning. I went from 30,000 to over 150,000, is what I made. But I didn't realize it in the beginning. Every step forward on that path I took, I was making trade-offs, right? And The trade-offs were more time away from my family, more stress, bigger teams, more connected to my cell phone, just more, right? And I got to a point, man, in 2008 where everything started to crumble down around me. And you kind of mentioned it earlier. The first domino to tip for me was I thought if I work harder and save more, I'd get what I wanted faster, right? I thought I'm going to retire in my 50s. And in 2008, I watched my brokerage account, my 401k, all the things that I was putting money into as in an attempt to go faster, I watched it all melt to the ground. And, at first I thought I did something wrong. But the interesting thing was I started talking to other people, coworkers, people that I was aspiring to become like in the corporate world. They all lost money. And I realized, man, I'm doing everything they're doing, but I was expecting a different outcome. And that was the first wake-up call. And the second wake-up call was I literally have no control. I mean, I don't know why I lost money. I don't know how to fix it. And if I don't control it, how am I ever going to impact it? So that opened me up to maybe I'm playing the game of money wrong and following the wrong path compared to what I wanted. But then, man, the second shoe dropped for me shortly after that. I mentioned all the trade-offs. I was actually at the time living in a different state than my family. I traveled so much. I had an apartment in Indianapolis, and at the time my family was living in Texas, and I'd already moved them a bunch. And so I just went back and forth. And you can imagine what kind of husband I was, what kind of father I was, not really living with my family. It wasn't working. And I'll never forget the day. This was probably 4 months after I lost all that money in 2008. I'll never forget the day I got a call from my wife, and she told me, Ryan, our oldest son, who's 4 at the time, needs an emergency open heart surgery. And George, man, that it was the biggest wake-up call I've ever had, because I kept telling myself, when I have enough money, I'll buy my life back. When I have enough money, I'll buy my life back. And at that moment, I realized I might lose everything that I care about in my life. And so I came back home. Spent the next couple of weeks in the hospital with my son. And fortunately, he made it through the heart surgery. He's 17 now, going to prom in a week or so. I'm excited about that. But I made another commitment. Like in that hospital, I realized I've got to find a way to take control over my money, but not lose my soul along the way. I've got to find a way to use money as a tool to build and live a life that matters. And that opened me up to a new possibility. And George, I think that's really where my path started, is for the first time, rather than giving my money to Wall Street, rather than giving my money to financial advisors and hoping that they had my best interest in mind, I said, no, I'm not giving you my money. I'm keeping my money, and I'm going to learn how to become an investor. Now, you and your audience know that that's not the easiest path, but it's the path of real freedom. Like, I can become an investor, and I can dictate and predict and impact the outcome of what my money does. And that's really what opened me up to taking control of my money and how important that is.
Man, that's yeah. I mean, I'm on that path right now. I'm being a good boy. I got my job. I'm working hard. I'm putting money in my Roth every year, maxing that out and following that plan. But like you said, I just watched everything melt down too, and I'm like, I have no control over this. I don't know what to do about that. And I think a lot of us fall into that trap of, yeah, I'm gonna just save, and then eventually I'll have the money. But I mean, you were making over 6 figures, well over 6 figures, and you found out that you were making the money, but there was a big cost to that.
Huge cost to that, man. And the biggest thing was I kept thinking that money was going to buy my life back. But, putting it, because here's the biggest thing that I had a realization. Even if I had enough money in a 401k, I wanted to retire in my 50s. And I didn't understand it at the time, but I couldn't. Like, I can't take money out of those accounts until I'm 60. Like, it doesn't matter. And so I'll never forget, too, one of my very first mentors in the game of taking control over my money, he said, Ryan, the game that you're playing is based on one thing. It's based on average. You're playing a game where it's for the average investor who's seeking to get an average return. If they want better than an average, it's just average plus one, which in the end of the day doesn't matter. But it's average investor, average return, average life expectancy, average retirement, average expectations. Like, you're coming to me asking for extraordinary, and in order for you to get extraordinary, you have to let go of average. And I was like, holy crap, he's absolutely right. I have to let go of average to pursue extraordinary.
Wow. That just hit real home to me. The average investor, average returns, average results. Oh, man. Well, while I soak that up.
Sorry, George.
No, it's good. It's good. That's what we're here for, man. To learn from you, because honestly, without that, I'd probably just be following that same path. But, man, I got to really rethink things. But why don't you tell me about meeting Brad and Jimmy? So, I mean, you started kind of getting into real estate, and How'd you meet them?
Yeah, man. So here's how it started for me. Like, in order to be an investor, in order to take control of your money, you realize that it all starts with you. You realize you have to improve your financial IQ. If money is just a tool, you got to figure out how to make more of it, keep more of it, and cash flow more of it. And I realized I knew nothing. I knew nothing, right? I could climb a corporate ladder, but I didn't know how to keep more money, obviously, from 2008. I didn't know how to turn my money into income. I didn't know any of it. And so I started reading a ton, man. I started listening to books. I started reading books. And I'll never forget there was one book that just blew my mind, right? And this is, I'm back home now. I stopped traveling as much, and I'm starting to spend more time with my family. And this was right when I was in the hospital with my son, and I picked up Robert Allen's book, Creating Wealth. And in that book, man, he's talked about if you buy two houses a year and you do that for 10 years, at the end of 10 years, you'll have 20 homes, and here's what 20 homes will do for you. And like he broke it down in such a way that it felt doable, right? I'm like, I could buy two homes a year for 10 years, and 10 years felt like a time frame that I could stomach, right? I'm still in my I'm now late 20s, early 30s. So I'm like, yeah, I could do it, man. I can do it. And so when I read that book, it set me off on a path. And that path was, dude, forget putting my money in the market, forget all of this other stuff. I'm going to start putting money in real estate. And one of the first things I knew I needed to do was find someone that had done what I wanted to do. And so there was a dude that I knew back in college, and I'll never forget, his name was Chris. And in college, I thought he was crazy because all of us were trying to get internships and jobs and all the things, right? And he was buying real estate. And I'm like, man, this guy's insane. Like he had like, I don't know, 3, 4, 5, 6 properties, whatever. But he was the only guy in my graduating class who didn't have a job. Like we all had jobs lined up and we all went off and did our thing. And I thought, man, that guy's going to be on the breadline. And when I was back home, with my family, we actually went back to my home, like where my parents lived for college, or when I was going to college for the holidays. And I ran into, like, when you're ready, a mentor appears, right? And I ran into Chris at a restaurant. And dude, for someone who didn't have a whole lot of confidence in their abilities, like he had confidence. And you've been around people that are confident, you can feel it. Like he wasn't trying to brag or push it in, like rub it in or anything like that. But we exchanged some pleasantries at a restaurant. And finally I said, Chris, you've got to tell me what you're doing. And I'll never forget this, man. He invited me into his office the next day. I drove into his office, and I was used to offices in the corporate world decorated with plaques and certificates and all the things that meant nothing to me. I walked into his office, and it was full of pictures of a life well lived. The adventures that he'd been on, the things he'd done with his family, the mountains that he'd climbed, all the things that I wanted. I kept telling myself one day. And I said, Chris, I don't care what you're doing. Tell me what you're doing and I'm going to do it. And man, I'll never forget. He's like, well, step number 1, Ryan, you got to put all your money in life insurance. And that's when the record screeched. I'm like, screech. I'm like, what? Life? I want to be financially free, Chris. What are you talking about, life insurance? And he walked me through how these life insurance policies can become a bank. And I just lost a bunch of money. So I'm like, that sounds cool. I'm not going to lose money. I get an opportunity to have my money growing. It's tax free. I can leverage it like a line of credit and it protects my family. I love that. And so, when I walked in there, he kind of modeled out what he was doing with insurance and how he was using it to buy real estate. And dude, I just did exactly what he did. I'd read Robert Allen's book. Chris had done what I wanted. I paid him $5,000 to mentor me over my next few deals. He mentored me on how to do it. And that's really what set me on a path to figure this whole game out of, look, make money, secure it in a life insurance policy, leverage the life insurance policy to buy an asset, take the profits from the asset, put it back in the life insurance policy, and just repeat that process. That's the entirety of the system. And there's some complex details, but at the end of the day, it's pretty simple. Make money, keep it, turn it into cash flow, repeat. And that's where the game started. And as I started doing that, I had some ups and downs for sure. But as I started doing that, I started gaining a lot of momentum. And because now I'm in this world of personal development and trying to raise my financial IQ, I ended up in a book club. I never thought I'd end up in a book club, but I ended up in a book club. And that's where I met Brad Gibb. And now here's the thing, like over the years that I was doing this, I had this kind of, again, this nagging voice in the back of my head that was building up saying, hey, you've got a problem, you've got a problem, you've got a problem. And that problem was taxes. Like, I just kept trying to outrun taxes. I didn't know how to play the tax game. But now I'm taking money out of 401ks and putting it in other things. So I got to figure this game out. And I met Brad, and I kind of showed him what I was doing. He's like, holy crap, that's awesome, but you've got a problem. And I'm like, I know I got a problem. Show me what to do. And so he helped me fix my tax game and put a tax foundation in, and we became immediate friends. Like, he was excited about what I'd been doing with life insurance and real estate. I was super excited that he showed me how to save taxes. And so we just partnered up. And Brad, because he's a math whiz, and me, I don't really care about numbers. I do care about numbers, but like I don't. he built a calculator for me to help me make better decisions when it comes to real estate. And he built all these calculations in there, like, cash on cash return, gross rent multiplier, all these things. I'm like, cool, Brad, could you make like that cell turn green? Like if it's a good deal, just make it turn green. And if it's green, then I know it's good, right? And if it's bad, make it turn red. He's like, "Ugh, Ryan, you're such an idiot, but yeah, I can do that." And so we built this calculator, and it just allowed me to start making fast decisions. I started running faster and harder because I'm like, dude, now I've got numbers to justify my behavior. And dude, that's when the game started to change. Like Brad and I got together. He brought math to what I was already doing, and it refined my process, and we started doing it together. And dude, that's when the game blew up.
Yeah, I mean, it's not like you don't care about numbers, but some people are wired different. You and I are the green red. Brad is definitely the to the decimal point kind of guy.
Totally. And I'm so grateful for it because he's like he gave the logic behind when I made mistakes. He's like, "Look, if you would have just looked at the numbers, you would have avoided that mistake." Or, "Here's what you did well in this property. Why don't we do more of that?" And that helped me definitely because I think at the end of the day, being an investor is having a decision-making process. He helped me refine my decision-making process, and just because of dumb luck or just sheer will, I was able to show to him, "Hey, it does work. Like this is what I've done. I could have done these things better for sure, but it works. Why don't you do it? Why don't we do it together? And why don't we share other people how to do it?" And that's kind of what started Cashflow Tactics, is just us masterminding together and looking at what I've done and refining the process on the next one, the next one, and the next one.
Yeah, I could see how he could come in and just optimize what you're doing and just taking it to the end.
Yeah, it was awesome, man.
Okay, so take us back there then. You're buying these properties. What's your first deal? Where do you get that? Like, how did you source it? What did you do with it? What did it look like numbers wise?
Yeah, man. I will just put it out there. Like, I actually ended up in real estate at a phenomenal time. I've been buying real estate now for over a decade, since 2009. But I started off in 2009, right? And that's right after the great crash of real estate. And in 2009, man, there was lots of opportunities to buy real estate. Most people were running, and just because I was, dumb luck, I was stepping into it. And so my first deal wasn't anything exciting. It was just a bank-owned property. Back in the day, the banks were selling these or liquidating these properties for 10% down. They were doing a lot of the repair and renovations for you because they were just trying to get all this inventory off their balance sheet. My only regret is I wish I would have bought more, but I bought three properties. My first property, no big deal. Second property, still not that big of a deal, other than I'm trying to do this all on my own. My third property is where this is before I met Brad, my strategy started to unravel a little bit, because I grew up in a family that you just work by the sweat of your brow. Like, I mean, if your hands aren't dirty, you're not working, right? And if you want something, work harder, right? If it's not happening fast enough, work harder, work longer. I mean, it's just like, that's how I was brought up. I was brought up kind of on a farm with a dad who just was a grinder and a worker. And I'm so grateful for that mentality. It's taught me a lot. But it kind of got me into trouble, because now I'm working a full-time corporate job. And that was still demanding, right? I'm still traveling. I'm still working. I had a way bigger commitment to be present with my family, but I'm still working hard. Now I'm trying to become a real estate investor, and I thought, for me, it's about the money, it's about the numbers, it's about the cash flow. And if I do the work myself, I'm going to make more money. Now, at the end of the day, it really wasn't about money. And I didn't realize this trade-off in the beginning. It was about freedom. It was about time. But I thought I needed more money to be freer to get my time. And so those first three properties, I did everything, right? I found the property, what rehab it needed, I did it. What renovations it needed, I brought it to the table. I qualified the tenants, I interviewed tenants, I managed the property once. I was doing it all, right? And on the third property, I'll never forget this. I bought it over Mother's Day weekend, and I put about $17,000 down on the property. Again, remember, 10% down. And I remember I came home on a Friday, just closed on the property, and I'm kind of having a panic attack. Now, if you've ever had a panic attack, you don't really, it's all this anxiety, it's all these emotions. You haven't really sat down and clarified your thoughts, but I'm literally having a panic attack. And I remember my wife, she comes over and she's like rubbing my back. I'm like, it's Mother's Day, I should be rubbing your back, but I'm like, I can't breathe. And she's like, you could do this, right? You could do this, you got this. And, I didn't know what it was, but shortly after I learned what it was. So, I bought the third property. On Monday, I host an open house to, get tenants in there and start figuring out who I want to get for the tenant. And by Wednesday, I had the property filled. And, the person that I chose to put in that property, he was the person that was willing to give me the most money down on that property. He gave me a lease option down payment, and he was willing to pay me 6 months of rent in advance. Now, his application had red flags all over, and I saw him, but he gave me a check for $15,000. Remember, I put $17,000 down on the property on Friday. Now on Wednesday, I've got a $15,000 check. I'm like, cool, dude, I just got the property for free. right? And so I took the tenant and I paid for that 100 times over the next 6 months. And the reason I paid for that, again, I'm a slow learner, right? There was no math or numbers for this other than just sheer stupidity and hard work. Like, that tenant was the worst. I mean, he would never pay rent on time. Everything was broken all the time. Neighbors were always calling it. It was always an issue. And I'm a nice guy, George. Like, every time he called me, like, I would sob on the phone with him. Oh, you can't pay your rent. You lost your house. You lost your job. I'm sorry. I'll pay it for you. Oh, you broke the dishwasher again for the third time in the last 3 weeks. Don't worry about it, man. I'm gonna buy you a new dishwasher. Like, that's kind of this is how I am. Like, I should never have been answering those calls, but I answered those calls, and over the next 6 to 8 months, that dude bled me dry. Like, I just kept putting money into that guy not paying bills, into that guy breaking things. And I'll never forget, man, I'm up in Rapid City, South Dakota, okay? And I'm selling a boardroom, a hospital boardroom, medical equipment. That's what I did for my job. And my phone started to ring. Now, George, at that time, every time my phone would ring, I would kind of have a mini panic attack and anxiety because I knew it was one of my tenants. I knew it was an issue, and I knew I didn't want to take care of it, or I'm just not good at it. And my phone started to just go off. Boom, 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 call after call after call. And I looked down, I kept glancing down, and it was all these different phone numbers from the same area code, but different numbers. And I knew there was an issue. So I excused myself from the boardroom, and I listened to my voicemails. First voicemail, as usual, from the spouse of the tenant, and she was crying. She's saying, please don't kick us out. I promise this won't happen again. I'm so sorry. Next voicemail, tenant, right? Yelling, screaming, swearing, belligerent, as usual. And then several voicemails after this from neighbors saying, this is it, I'm suing you, right? I'm suing you. And I'm like, oh my gosh, dude. And then I had a voicemail from a police officer saying, son, you better call me. I called the police officer first, and I found out that this tenant, with a gun in the middle of a crowded neighborhood, shot a neighbor's cat. Like, literally walked out, boom, blasted the cat. And George, man, I can't even tell you, dude, at that moment, like, I literally just melted into a corner. I'm up in Rapid City trying to sell a boardroom of doctors. I didn't go back into the boardroom. I was like breaking down because just a few years earlier, I lost all my money in the market. Now I'm literally looking at the possibility of losing all my money again in real estate. And I realized, man, either people are lying to me, like real estate isn't the tool, or I suck. And I'm grateful that it was the second. Real estate is the tool. I sucked. And I had to acknowledge that. And I had to figure out what I was doing wrong. But more importantly, I had to figure out what I actually wanted. I didn't actually want to make money in real estate. Of course I want to make money in real estate, but that wasn't what I was after. I wanted to be free. I wanted to own my time. I didn't want to have a part-time job in real estate and a full-time job in the corporate world. And so after I licked my wounds, picked myself back up, acknowledged that I was the problem, I decided to fix it. And the way I decided to fix it is by building a system where I wasn't the one doing all the work. The reason real estate sucked is I was doing all the work and I wasn't very good at it. And I didn't want to become good at it. I wanted to manage a system to get an outcome that I wanted. And that's what pivoted me from doing real estate actively to doing real estate what I now consider relatively passively.
Okay, so that's kind of interesting. There's two things there. So I think a lot of times we get caught up in the notion of financial freedom, right? And that's kind of what you were chasing. But then you kind of realize that it's more about the freedom than the financial part of it, right?
Dude, in Rich Dad Poor Dad, again, man, I've found so many of my answers in books, but I'll never forget. There's a section in Rich Dad Poor Dad where he talks about money isn't like financial freedom isn't a function of money. Financial freedom is a function of time. Like, financial freedom is a measurement of how much time you owned. And when I understood that, I realized even though I had real estate and even though I had more money in my bank account, which was true, I was less free. I owned less of my time. And if I wanted more of my time, I had to be willing to give away some of the money that I thought would get me what I wanted faster by hiring people, by optimizing, by being willing to not do all the work myself. And yes, I'm going to give away some of the profits, but I'm going to ultimately get back what I wanted. And that's what pivoted me from trying to do it all myself to saying, how can I be the CEO? And, think about a CEO. A CEO doesn't know how to do HR, doesn't know how to do finances, doesn't know how to do operations. They know what done looks like and what success is, and they manage to an outcome. So that's kind of what I envisioned for myself is I want to be a CEO of real estate. I don't want to be the doer of real estate. And so that helped me understand how to build a team, first and foremost, to where this is what I want. I'm going to pay you really well to do it. Find the property, rehab the property, manage the property. I'm going to build a team. I still have that team today. I love them. And then this was back in 2010, 2011. I think it was at the beginning of what is now a little bit more of a main street concept, which is turnkey real estate. And I started doing some research and due diligence on it, and I started to plug into turnkey real estate. And that's what helped me go from 3 properties to the 17 that allowed me to quit my job to beyond. I now have over 40 properties, and it's simply because I plugged into turnkey real estate. Now I can own real estate and manage outcomes through relationships and expectations, but not have to do the work of all the things that go into finding property, rehabbing it, renovating it, managing it, or repeating the process.
Gotcha. Yeah, that's that's a super important lesson. I mean, a lot of new investors, myself included, I'm like, I'm gonna do it all. I'm gonna work my butt off, like just to get off the ground. But I think the quicker you make that transition to hiring a team and building something that doesn't need you in it, the sooner you're gonna actually realize that freedom part of financial freedom.
Bingo. And I think it's helpful to do it because then you know what done looks like. You actually have the hands-on experience. And so I've been highly involved in real estate. I still own a bunch of real estate here in Utah, in addition to other states now. And it's fun because when there are opportunities to go demo a property or rehab a kitchen, I'll still go out there. Now I do it now to take my kids so they can understand what owning real estate means. But it's very, very important that you know what done looks like. You can't be like real estate. Unless you get to the point where you literally have a family office and you have a portfolio manager and all of that, real estate's always going to have a semi-active component to it. Now, the scale that you want to figure out is how active do you want to be. And for me, I spend about 3 to 5 hours a month managing success and outcomes and managing the relationships with my real estate partners. That's how I manage my portfolio.
Smart. Yeah, that's a lot of leverage you're getting on their on their labor. So another thing I wanted to touch on there. Sounded like a horrible deal. I mean, it had you in panic attacks, probably like almost blew that deal and your corporate job on you. But do you still have that property?
Dude, I still have that property, man. It wasn't a bad property. It was that I was a bad investor. I was just an idiot. And here's the thing I love about real estate. If you buy real estate, I really believe for the most part, now there are some bad properties for sure, but for the most part, real estate's kind of like a bad haircut. If you hold it for long enough, it's going to grow back. It's going to be okay. And that real estate, dude, so I bought it for $170,000. Today it's worth probably $550,000. I've done 2 cash out refis on that. I just did a cash out refi about a year and a half ago on that property, along with the rest of my portfolio. I pulled $170,000 of cash out of that property. Monique is the tenant that's been in that property. She's been in it for 11 years now. She was the one that after I went from, and she's a unique example, right? I still have turnover in my properties, but I know Monique because Monique has literally lived in that property for 11 years. And here's my philosophy with it. Because I own real estate and because I want it passive and because I want it to be a long-term profitable asset, I do a lot of my work on building good relationships with my property managers, first and foremost, and vicariously through my property managers, building good relationships with tenants. On Monique, on that particular property, I could probably charge her $200 or $300 more per month in rent. I don't. Why? Because she's a fantastic tenant. She pays her rent on time every single time. I've raised the rent over the years for sure, but it's at least $300 under market value right now. And people might be thinking to yourself, well, why? Why are you giving cash flow away? I have never once had a vacancy in that property for 11 years. I have had very little property damage on that property. And when it is, it's literal damage that just comes with wear and tear of a property. And remember, I just pulled $170,000 of equity out of that property. And if you divide that by $300, I just pulled like 30 years of cash flow out all at once. So like I'm building a portfolio, just like Robert Allen talked about, that I'm not buying and selling. I'm not fixing and flipping. I'm buying and holding, and I want to hold it over the long run. So one of the most powerful things to do with that is build good relationships with your property manager and good relationships with your tenants and have a good place for a good family to live in and try to keep them there.
Yeah, I mean, you might be like, oh no, he's giving up, $300 a month to this lady, not raising her rent to market prices. But I think we would all pay at least $300 a month if you had a cat shooting tenant in there to get him out of there.
No doubt. No doubt. And so it's just a good example of real estate. I mean, real estate, there's not a risky investment. I think it's a risky investor. And so as you raise your financial IQ, you decrease the risk. And I think being an investor is you get paid in proportion to the amount of risk you can remove from the equation. That's when people lose their shorts, is they're risky. And so they're leaving a lot of risk in the investment because they don't know how to remove it. So you get paid in proportion to the amount of risk you can remove from the equation. That's what, in my opinion, what defines a good investor.
Interesting. I like that. Okay, so one of the real unique things about your whole plan and everything you're doing with real estate is leveraging life insurance. So tell us about that. How do you structure these policies? Are these cash value life insurance? Are they index universal life? Like this part of the game is very hard to understand for a lot of people, myself included. So walk us through that. What kind of tools are you using? I mean, you call it the vault, but what's inside of the vault?
Yeah, let me make it really, really simple for you. Okay, so here's how insurance works. Like, let's say I'm a father of three, right? And let's say I didn't know anything about the vault. I know I probably should have insurance, right? I should have insurance that way. If I die, my family's taken care of. So in that case, I'm gonna go to an insurance company and I'm gonna say, look, give me an insurance policy with the most death benefit, but I want the least amount of cost possible, right? Because the only way I win that game is if I die. And that's a crappy way to win, but at least under that case, my family's taken care of. So I want the most death benefit for the least amount of cost possible. A vault is the exact opposite. I'm going to go to an insurance company and I'm going to say, hey, I want to give you as much money as I possibly can, and I want the least amount of death benefit for the money I'm going to give you. So the exact opposite equation. Why would I do that? Well, all of that extra money I'm giving to the insurance company, it's called cash value. It's money that goes into a policy that if you can overfund it and put all this money in, that cash value is a very, very unique financial tool. Number one, it's going to give you a guaranteed rate of return. That guarantee is backed up by insurance companies that have done these type of policies and these guarantees for literally hundreds of years. So it's a guaranteed rate of return. We only use mutual companies, not publicly stock traded companies. And so in addition to their guaranteed return, they take their profits and they distribute it to their mutual owners as a dividend. Again, a 200-year track record of a dividend. We're using insurance because it protects you from the greatest destroyer of wealth. Like if we had to fast forward and say, what's the biggest destroyer of wealth? I believe it's taxes. And I believe what most people are doing wrong in the game of money is they're deferring their taxes. They're using 401ks and IRAs and all of this stuff. And what that ultimately means is you have a business partner in retirement. It's the IRS. And the IRS gets to tell you how much of your portfolio they actually own at some future time, in the future with an unknown tax rate. And so you're using insurance to eliminate taxes, but the crazy part about it is this cash value is allowed to be used as a line of credit. Now, you're a real estate investor, George. Your audience is a real estate investor. Take insurance off the table for just a minute and put on a house. A line of credit means I can go to the bank and say, hey, I've got $100,000 of equity in that home. The bank will allow me to access that equity via a line of credit or a cash out refi because the collateral is the house. And then I get to go use that equity for something else. Put insurance back on the table, it's the same thing. All of that cash value is now a line of credit. The insurance company allows me to access that line of credit. They use the death benefit as collateral. And when I access that line of credit, the money doesn't come out of my policy. It actually comes from the insurance company. So they give me an open line of credit up to whatever cash value I have. And so what this ultimately means is my money is now doing two things. It's still in the policy, compounding and growing tax-free. I take a line of credit from the insurance company against my policy. I go use it to buy an asset. I use the profits of that asset to pay back my line of credit. But now my money's working in insurance and in an asset. And if I can repeat that process over and over and over again, like imagine how much faster your wealth can grow if your money's working in two places at the same time. So that's kind of the philosophy behind these life insurance policies. The number one thing is the policy is meant to keep your money safe, private, and protected. It's meant to build wealth. And wealth is a function of how much risk you can remove and ensuring that you can pull profits from real estate and have a place to put it. And so we only use whole life. We only use overfunded policies, and we make sure that they're just a bucket where we can store capital in. And so what most people do in our community is they'll set up a policy, they'll transfer where they were saving their money from a 401k or a Roth or whatever it is. They'll start redirecting that money to a policy. They'll fund it. They'll leverage the equity of the policy, the cash value. They'll go buy assets. They'll pull the profits from those assets, pay back their credit line, and just repeat that process. And so now their wealth is growing in two places at the same time.
Yeah, is that what you mean? I've heard you say velocity of money. Is that what you mean by increasing the velocity of it?
That's it, man. Velocity. Like, I'll never forget, I've had so many lessons from these books, but I remember the first time I read Rich Dad Poor Dad, I literally threw it away. I'm like, this is the stupidest book ever. Why? Because he says savers are losers. And I'm like, dude, that offended me. I'm a really good saver. Like, I literally am. I grew up in a household where you change your own oil. If it's broke, you fix it. You're not going to buy something else. You wear your shoes until they have holes in the bottom. Like, you save all of your money. And I've always been a good saver. And now Robert Kiyosaki is telling me savers are losers. What I didn't understand was when you take your money and you park it, in an inflationary world that we live in, that's why we're losing the game. Like if I'm putting my money and I'm parking it in a place that the market is volatile, that inflation is destroying it, that taxes are going to be future, taken out of that account, I'm probably going to lose the game of money. The opposite of that is I still have to save, but now I want to take the savings, I want to take money that I could have spent on something else, pull it out for my future, for my financial freedom, and I want to velocitize it. I want to move my money. Think about a bank. Like the bank is the perfect model. When you put money in a bank, there's 3 rules to banking. Number 1, they need money coming in. So they, the world that we live in today is like it's all banking. But back in the day, remember when banks used to kind of give incentives? Hey, come over here, we'll give you a free toaster, or come over here, it's a higher interest rate. They need money coming in. Then once they have money coming in, they need a way to leverage it. So they have to keep a small amount of reserves. They get to go out and leverage the rest of it. SVP or SVB, banking failure is kind of, a hot topic right now. So they have money coming in, they then leverage it, and then it's velocity. They want to turn money as fast as they possibly can. When one loan is paid off, they're going to lend it right back out. So the faster they can move their money, the more profits they make.
Yeah, it's all about that cycle. So you mentioned, I've got the term policy, small payment, big death benefit. So how do you set up things differently than the traditional way that they sell us life insurance?
Yeah, and dude, you should probably keep your term policy because it's serving a purpose for insurance. What we would do is if you came to the table, we would say, look, let's start with the end in mind. Like the end in mind is I want to be financially free. Okay, cool. If that's the objective, how much faster can you get to that objective if your money's working in multiple ways for you? A lot faster, right? And so if that's true, let's kind of compare, like where is your money currently going? If it's going to a 401k, a Roth IRA, a mutual account, a brokerage account, even if it's going to real estate, cool. Let's figure out the most effective way for you to get the outcome. And then let's come up with your target. And for me, I call it a savings goal, right? You might be saving a little bit over here and a little bit over there. My encouragement is take all of your savings and focus it, right? So if your number is 20,000, I can save 20,000 a year. Then we take that $20,000 and we'd say, okay, for George, Mel, who's your age with your health profile, what's the least amount of death benefit you need so that the majority of that $20,000 is going to be available in cash value? And that's how we build your policy. That way you pay your premium to the insurance company and immediately from day one, you've got cash value. And it all depends on how much money you're putting in and all of that kind of stuff, how big your line of credit is. But the objective is let's figure out how much money you can put in. Then let's go to the insurance company and say for a Mel, George's age, what's the least amount of insurance he has to have? We'll buy that for the most cost-effective way to buy it. And then that way most of your money is in cash value and we immediately start buying assets.
Oh, you know what? I think we need to do this because we just took a cash out refi a couple years ago, like when you did, when interest rates were record lows. And we're sitting on the money.
Yeah.
Like we went to build an ADU and the price of the ADU doubled in the last few years. So that's kind of off the table. And then I saw your stuff and I was like, maybe we should park this in a cash value life insurance policy and then borrow the money and build the ADU or buy the property or whatever it is.
It's so powerful. You want to know something cool, George? I'm gonna share this with you. So I'm fortunate now. I'm a very committed person, and when I find something, I'm like a dog with a bone. I'm just gonna get it, right? And I'll never forget. I owe so much of my success to Robert Allen's book. Like he's a mentor of mine. He actually is my neighbor now, and we invited him to our event a couple of years ago, and we actually gave him a lifetime achievement award simply because he wrote a book that inspired me to change my life. And now I've had the blessing and opportunity to help thousands of people do the same thing. And so anyway, long story short, he talked about if you do this for 10 years, you'll wake up in 10 years and you'll be wealthy. And that was the dream that allowed me to stay committed through the hard times, allowed me to refine my process to get better and better, but stay committed. And I'll never forget this year, last year, we moved into our dream home. And we've kept our expenses low. We've kept all of our money going to investments. We've literally kept everything moving now for over a decade. And about a year ago, we decided to, for the first time ever, take money out of our portfolio. with the intention of not rebuild, like building more of the portfolio, but actually using it. And the cool thing about it was in his book, he said, you'll wake up one day and you'll be wealthy. And the velocity of wealth now, you can take money out and your game plan will still continue to grow. Yeah, I took money out of my portfolio, but I still have all the houses. I'm still cash flowing. It's going to grow in equity again. I'll take it out another 10 years from now. But we took out, and this is crazy, I'm going to say it on your podcast, but we took out $1 million out of our portfolio. We leveraged it through cash out refis, 100% tax free, 100% tax free. And we used that to build our dream home. And dude, I'll never forget, man, when that happened. I sent Bob Allen a text message. I'm like, I didn't understand what you meant. I didn't understand what you meant when you said that. But I'm so grateful you said that. And I'm so grateful that that dream kept me going because, oh my gosh, I woke up one day and I'm a high school dropout. I went through college not to learn, but to check off college. And like I've made every mistake in the book, but I bought single family homes. I sat on them. I made all the mistakes you could possibly make, but I just kept going. And dude, I just pulled $1 million out tax-free out of a portfolio. It's like I never could have imagined that 10 years ago when I got going. And I'm so grateful for the power of real estate. I'm so grateful for the power of the vault because all along the way, I've been able to secure my profits and I've grown wealthier every single year. And it's just a simple process of make money, keep money, turn it into cash flow, repeat the process. Appreciate you, George. Appreciate you, man. I'd love that, man. Dude, let's record the whole thing, dude. It's a lot easier than you think, and dude, it's such a mind-bending experience to go through to understand our dollars. Like I mean, think about it really quick, George. The money that I have, the money that you have, that's money that we've already traded our time for, which means it's the most valuable resource. If we honor our time, it's the most valuable resource we have in our possession. And when we frivolously put it somewhere that it's not going to get us our goals, it's devaluing the time that we put in to get the money. And so the step number one that we do with people in setting up their vault is helping them understand the comprehensive nature of what a vault does, and then identifying where is your money going and could it be more effective in another place. And not everyone goes all in on a vault. I totally get that. But for me, the faster I stopped focusing, like the faster I stopped diversifying, which is literally a way to say, hey, I don't have any control, so I'm going to try to minimize my loss by not having any control. And I accepted control and I said, look, I'm going to take control of my money. I'm going to raise my financial IQ. And I focused. Like I became, now the vault is easy. Like I know exactly how it works because I just focused. I doubled down on putting money in the vault. I doubled down on becoming an elite investor at buying turnkey real estate and repeating that process. And now financial freedom, it's inevitable, right? If I can just repeat that process enough times, I can pull the future forward. And that's the fun part about the vault is the vault gives you a foundation to never go backwards. It gives you a place to store your capital that's 100% in your control. It sucks watching the market go down, but that doesn't impact me whatsoever. It sucks watching interest rates go up and down, but that doesn't impact me whatsoever. It sucks to know that taxes are going to probably go up, but it doesn't impact me whatsoever. I'm playing a different game, not the average game, an extraordinary game.
Yeah, again, when you say that average game, ooh, that hits home because man, I'm a really really good saver, but man, I'm a loser, and
Robert Kiyosaki.
I had that same reaction too. I was like, "What do you mean, a savers or losers?" That first read through that kind of gets you, but no, this is great, man. I'm fully invested in Roths. I put all my money in there. My first three stock picks went through the roof. All of a sudden I was looking in there. It was like six figures of net worth in that Roth account. And then I look this year. I'm like, not quite the same story. So that's kind of some heartache there. But man, let's do that. Let's get together. Let's build a vault for me and my family, and let's walk everybody through the process, guys. If you want to see it, give me a thumbs up. Drop a comment. I think this would be valuable for everybody because I've been pitched the cash value life insurance before just by our financial advisor. And the questions we asked, he couldn't quite explain, how it worked, what the catch was. But I think Ryan, you've definitely explained it to a point where I can grasp it. I'm gonna make you talk to my wife though, because she's gonna hit you. She's the pit bull in our relationship. She's gonna hit you with some questions.
Well, here's what I'll share with you on that, George, really quick, if you allow me to. Dude, I've been in the game now for over 10 years, right, helping people, and my perspective has shifted, or expanded, I guess you could say, in the last couple of years. In the last couple of years, I've handed out three death benefits. All three of them were on people that had no business dying when they died, and this last one happened over Christmas, and I'll never, ever, ever forget, man. I mean, it just made me so dang grateful because this guy has been a client of ours for 4 years, right? And when he came in, he's a busy dude. Like, he's a CEO of a company, and you can imagine, as a CEO of a company, there's a lot of things going on, and he had all these ideas and aspirations of buying real estate and growing his wealth and doing all this stuff. We built a vault for him, and the vault was big enough to do all the things he wanted to do. But for the last 4 years, all he did was put money in a vault. And he kept telling me, yeah, I'm almost to the point where I can buy real estate. He had plenty of cash in his vault to buy real estate. He just didn't have the time to sit down and do it. But man, a year ago, he was diagnosed with a brain tumor. And I'll never forget, dude. His first call obviously was to his beautiful wife. And his second call was to me. And that call was, Ryan, remember I bought that thing? You said we had life insurance, but I want you to tell me more about life insurance. We've been so focused on the cash value. Tell me more about the life insurance. And he passed away in November of last year, and we just barely distributed to his wife an $8 million death benefit. And that is the only thing that was left behind. Now, a major hole, right? You'll never be able to replace the individual. But that woman who's in her 40s, if she plays her cards right, will never have to work again, right? And so he took care of what mattered most, even when he didn't know that that's what he was doing with the vault. And so the vault is just such a dynamic thing. It's going to give you a way to accomplish your short-term goals, but when life happens, you've already prepared for the worst case scenario.
Yeah, that's super powerful. I mean, it just does so much, and it's hard to understand. But man, if all the wealthy people are using it, it's probably worth digging into and figuring out. So definitely come talk to you guys. And like you said, Cashflow Tactics, you guys help people buy turnkey real estate. So if you are one of those busy professionals, the CEO of a company, or somebody who just doesn't want to put in all that time to get that return, working with you guys is a great solution. You build the vault. Jimmy down in St. Louis, he's got all the turnkey properties you could probably ever want. And the system you guys built just makes it easy for people to come in, plug into that system, and really just get to an elite investor level without really putting a bunch of time and effort into it. So it's kind of a neat thing you guys are doing there.
My man, George, I sure do appreciate you taking the time and just allowing me to share my story with your audience. I hope it served the people that it was meant to serve today. I mean, we were talking about this a little bit before we turned the record button on, so I'm going to just end with what we started off air. I believe it's everyone's obligation to become financially free. And I know that might sound a little bit exaggerated, or maybe a little bit too harsh, but here's the reality, and I've seen it now, and you probably have as well, George. I've now talked to thousands of people in all different walks of life, and the number one thing I hear from people is someday I'm going to do the things I want to do. Someday I'm going to use my talents. Someday I'm going to live my best life. Someday, fill in the blank. And it's almost always money that's preventing them from today. Right? Someday isn't even a day in the week. There's Monday, Tuesday, Wednesday. There's not a someday. And so I believe the reason that we all have to become financially free is so that it's a gateway to live our best life. When you remove money as the constraint of why you do or don't do something really interesting opens up. You start to live a purpose-driven life. And I believe in a world full of problems, the solution to those problems isn't more government. It's people waking up to their purpose and living their best life. Because when you live your best life, George, it makes me better. You get an opportunity to do things that I can't do. Just like Brad solved problems for me and I've solved problems for him. If Brad didn't wake up and become financially free, my tax problems would probably be a lot bigger right now. But Brad loves the tax code. He's in his unique genius and ability when he's doing it. And so I'm grateful that people pursue their dreams and use money as a tool to open a gateway of freedom. And I believe that's the obligation that we all have, is to serve humanity at the highest level without the constraint of money on the equation.
Yeah, I love that. I think who wouldn't want to be financially free? But making it an obligation, guys, get out there. Nobody's going to do it for you. That stimulus check we've got, that's a drop in the bucket, and it's only made things worse. Like, nobody's going to save you but yourself. So take responsibility for it. Take ownership of it. I love it. So Ryan, thank you so much for all the wisdom you dropped on us, man. I really did save the best for last. Sorry, Jimmy and Brad, but
Yes.
man, you delivered some really good stuff for us. So really
Appreciate you, George.
All right, guys, you can learn more about Ryan Cashflow Tactics and all about what they do and how they do it by going to REIClub.com/cashflow tactics. And stick around, like this video, drop a comment. I'm going to build a vault because I think that's really the key to getting your money to work for you and getting to that next level of real estate investing. So guys, this is George with REI Club, Ryan Lee from Cashflow Tactics. Thanks so much for tuning in. We'll catch you guys on the next episode. Awesome, man. Well, thank you so much. That was